market opens at 9:30, I know that it's likely to draw up into that gap, but I don't think it's going to completely close the gap. Why? I'm going to show you. It starts off by going up there. That's why I said I like 21,615, because I was trying to time and pick the very price that it was going to go up to, but not close in the entire range of that gap. And the market drops, goes out to the sell side. Why? Because that first run up in there, people want to see that gap close. A lot of people know gaps need to be closed. Gaps have to be closed. Gaps like to be closed. Not initially. They don't have to do it right away. It can be deferred. So by dropping down there, everyone that bought it trying to get that gap closure, they're getting crushed, and their stop loss that's below the low of the day, or if they're using this area down here as a stop loss location, they're rated. I know that this is going to happen, so I'm going to buy as it does that very thing underneath at 21,508. Then I'm going to expect the market to go up and close the gap, and then if I can still hold on to the move, get that ride up into the buy side liquidity there. Ultimately, this is my power 3. No one else teaches this but me. Now, there's a lot of people that's learned from me, and they have tried to put it in book form, and they sell mentorships, and they don't tell anybody that they learned it from me because they want to sound like they're smart and they're genius and whatever. But you'll never see them do what you watch me do today. And that's why I don't teach everything. There has to be something held back from me. And it's not selfishness. It's the fact that I can point to someone and say, they're a liar. You didn't learn that from a book. You didn't learn that from somebody that doesn't even live anymore. It's come from my work, and that's why I put it out publicly. It's in a format where on YouTube you all can see that I'm the author of all this stuff. Now let's take a look at it in price action. What this is suggesting is I want to be buying at the opening price at 9:30 in regular trading hours or lower in that green box. And then also there's our first percent of fair value gap. Now I rushed in the recording to draw it because markets are moving around. But this is how the gap should look. You got to include that volume imbalance. As it goes below this sell side liquidity pool here, I'm buying it. I'm waiting for it to dive down there and buy that because I know what I just outlined is likely to occur. There are my entries. Notice how they're all grouping below the first presented fair value gap area here. And it's inside there too on a couple of them right at it. Is it right there? That's one there.